All right, tonight we're going to talk about .com bubble burst back in 2000 on the Nasdaq. As you can see here on the Qs, Nasdaq 100. Tweeted out earlier this year, earlier today. Bear market rally could be as much as 63% before the 80% fall. Currently 45% bear market rally. Nasdaq, hashtag Great Depression. As you can see here, we have a lot of engagement here so far. I did it earlier this afternoon. We have about 33,000 views. We have about 100 comments, 51 retweets, 12 codes, 230 likes, 37 bull marks. And this is what I wanted to talk about. So what does it take? What does it take for, you know what I'm saying, this to actually play out? Look at all these people got things to say about this chart here, but I want to reveal it to you guys what we need to look out for this to possibly play out. So first of all, I went into line chart. As you can see right here, we're on a line chart here, and you know what, we can't completely dispute the fact that all these tech stocks been crashing down this year and last year, right? Like something like Wayfair, DocuSign, PayPal, even Facebook, you know, Netflix crashed down. You know, they're making some rallies. I see that. Amazon crashed, Google crashed. You know, a lot of these stocks are beyond repair, right? Some of the stocks, tech stocks, crashed down 80, 90%. And recently what we witnessed, you know, is the possible bear market rally, as you can see. But what we want to observe is, when we look at 2000 right here, as you can see, this was the 2000 .com peak. From here to the low, there was a 39% decline. So as you can see, we actually saw 39% from the peak to the low, 39%, so about 40%. We had just as much run to the upside. This is what is known as a bear market rally. As you can see, 42% up move here from the low to the peak. As you can see, 42%. Currently, you can see from the peak, right? From the peak right here to the low, 37% decline. From the low to where we're at, 45% run. I would have to say, those numbers are awfully close, right? As you can see right here, 39%, about 40% decline, and 42% up move. Before the downtrend can begin, we must first identify primary term lower high. What's the primary term lower high? Well, definitely, this is the peak right here. Let's call that a high, all-time high back in 2000. We can now conclude that this is the lower high, yes? Because definitely this high is lower than this high, right? So it's low. It is what is known as a lower high. What is the definition of downtrend? Lower highs and lower lows, looking at the primary term, right? So the primary term, we got the lower high here. So what will be the low? For the low and the lower low, that will be the low right here, right? So we have, as you can see right here, lower high and low. So what's the lower low? Once we broke beneath this support right here, as you can see, now that is going to be considered lower low. That's going to be the first recipe before this market can go down with this primary term downtrend. Lower high and lower low, because this low is lower than this low. This high is lower than this high. Low, high, low, low. Yes? We understood that, right? So once we see that, as you can see, this market continued with lower highs, lower low, and it's very visible, right? Nothing ambiguous about it. We continuously cultivated lower highs in the primary term. Obviously, in the fractal of things, you get these little smaller waves around the big waves, right? So you have a smaller term, mid-term, right? But as we count the primary term waves, we can see these lower highs and lower lows. And as it continues, we want to continue to give benefit of the doubt to the sellers. So what's important though is that after 2000 peak, what we saw was 40% decline to make that low. We bounced back up, what is known as a bear market rally, or AKA lower high. Lower high, we made 42% rally, 42%. Made a 42% rally, pull back. And as you can see in the fractal of trend, this is a primary lower low, but there is another midterm lower low. So if you look at this as like a triple top or double top, that's the neckline. So you can see it breaks beneath it. It goes retest, prior support acting as new resistance, and it comes down, break beneath this low. So you can see the lower lows and lower highs just in this midterm sense of things, yes? Right? And that's how you're going to see and identify the downtrend.
Hooray!
So what do we need to witness for us to see a possible 2000, 2001, 2002, 2003 like downtrend bear market move to the downside? First of all, we can see that this is where it peaked out. We saw 37% correction, and then we rally back up, and that's 45% rally. So if this is going to play out similar to what we've witnessed back in 2000 during .com bubble bursting crash, what do we need to first see? First of all, this market might even do this. Some sort of a double top, triple top, some sort of a topping pattern in the midterm. We don't know how it's going to play out, and I'm going to continue to give you guys update on this. But for now, let's say if this market was going to turn, cultivate the lower highs and lower lows, because again, this is the peak. That's the high. That's the primary low, right? Because that's where we saw this thing coming down and seeing that bear market rally. Yes, in that process, we saw midterm waves here, right? The fractals of this trend, right? So you can see the smaller lower highs and lower lows, definitely a downtrend. That downtrend was dismantled because we saw the bear market rally, right? Again, very similar price action to back in 2000. So if this is going to turn into like 2000 .com crash scenario, you first gonna wanna see some kind of a lower high and lower low. First, you're gonna see the neckline, the midterm low neckline retesting break. First of all, you need to see a break, right? Break below it. So we got the midterm lower low, and then possibly because the market is not gonna come straight down or straight up. So it's going to come down and go back up to retest that neckline where it's known as previous support as new resistance. And if that gets rejected, because you have to understand, sometimes resistance doesn't get rejected. Sometimes it can break above it and then start cultivating what? Uptrend. So you also have to understand this entire setup, this entire signal can be negated and nullified if we see something like this.
Oh my god. Oh my god.
So I'm not completely fixated in the fact that for sure we're gonna see 100% guaranteed. Kim said so. So it's gonna play out like .com crash like 2000. That's not what I'm saying.
Perfect.
What I'm explaining to you now, because you know there's so much I can say in the little tweet here. So if this were to play out like 2000 .com crash, you would wanna see the lower low, and then lower high, and then this thing coming down. But it ultimately, though, needs to break below the primary low. Why? Remember, it needs to cultivate so definition of downtrend is lower high and lower low. So we got the primary lower high on this bear market rally here, yes? And then that's the primary term low. It needs lower low. So it needs to break below on the Qs about 250 or so. Once we broke below it, this is where you're gonna see huge warning signal trade. I mean, I think really though, the first stage warning signal should start coming up here. Once this level gets retested and rejected, if this gets rejected, that will be the initial warning signal that we have the midterm lower high and lower low. And then if this thing breaks below the primary low, which is right here, this is where you're gonna see just whole lot of red flags going everywhere. You should be understanding that we could potentially see massive drawdown and a crash, bear market, real true recessionary type of down move that's gonna dismantle and completely destroy everything in this path. Nothing is gonna survive. It doesn't matter if it's Google, Apple, Amazon, Nvidia, AMD, Tesla. Everything is gonna crash down with it.
You serious?
So that kind of thought process should come about right about here. And then once that happens, there's gonna be another test. Again, market doesn't go straight up or straight down, so it's gonna go up and retest it. And then as it continues to create that lower highs and lower lows, and that's how you're gonna see this market possibly playing out how we witnessed the great crash of 2000 .com bubble burst.